everything I saw from sharks, and Rain just mentioned as well, like there were like 3 different entry points, and I was like, well, what? And one can be above, one can be below. How do I know? But think about the evidence. If I just draw out this, and we don't even think about it as a 5-0 pattern, right? If I just draw out this, all right, what do you guys see here? What is this? Bearish trend, right? 3-point move, bearish trend. So then we have this. Hold on. Then we have this. What does this move do? Rotation. Not only do we violate our most recent outside return, which violates our previous bearish trend, right? So 3-point move, bearish trend. We violate our outside return, meaning that we're in a trend rotation. And a trend rotation is not a bullish trend, but a trend rotation means that the previous trend is broken, violated. We now could be going into a bullish trend, or we could be going into consolidation. But not only do we violate this, but what else do we violate? The previous move as well. I imagine this is our starting point, so this has to be some type of impulse leg. So we take out 2 levels of structure, right? Now, you think about the buyers that are interested down here. Just like butterflies, right? Just like crabs, right? Any type of extension, right? As price moves up, do you think there are more or less buyers interested as price gets more expensive? Less buyers. Less buyers, I should, phrasing, Akil. Less buyers interested in this price point. Because we'll see in a little bit, there could be more buyers interested. But less buyers interested in this price point, right? Because this was, just making up numbers, this was $1. This is $5. If I'm at the grocery store, I like something for $1. I like it a little less for $2. I can settle for $3. I don't like it at $5. But I know that I like this product, which is the move. And if it were to go on sale again to $3, especially knowing that it was once $5, I would buy it. Does that make sense, guys? I'm trying to give you a little bit of the psychology behind it. Imagine an item you like. When it's cheap and discounted, you buy more. You really like it because you liked it anyway, but you like it more because it's cheap. When it's at normal price, you still like it because you like the product. When it's at higher price, you still like the product. You're just not willing to buy it. But you're telling yourself, hey, if it goes down to normal price, I'm going to get some because it's cheaper than I saw it last week. So that's the mindset we have. We broke 2 levels of structure. So up at this level, eventually there's some profit taking, right? Because you need to take money from the market. So there's profit taking and a combination of less new buyers interested because the price has gotten cheaper. So what do we typically see after that? Type it in. What do we see as price gets expensive? We see old buyers start to take profit. If they take profit, they have to sell. We see less new buyers interested because the price has risen up and they're like, I don't like it at $5. So we see a little bit of relief, right? We see some new sellers as well because now it's, this is a cheaper price for sellers than it was down here. So we see some relief, right? Relief does something like this. In the 5-0 pattern specifically, it comes to the 50% retracement, right? What do you know? Now we see this pullback. This is our relief. What other type of trading situation is this, right? Pattern aside, right? This is why, don't even think about this as the pattern. Think about this as just pure price action movement. Pattern aside, what is this? This is our pullback. This is our pullback with 50% confluence to an inside previous level of structure at the price that you now like. Buyers are interested again. I got it cheaper, right? It's cheaper to buy it here than it was up here. I'm still interested in buying, just not at this price. But when it gets to this price, now I'm interested again. This is no different than, right? We talk about accumulation distribution, right? Your basic Dow theory, Wyckoff cycles, whatever you want to call it, right? We look at this in the market. I'll tell you, this is one of my favorite moves, right? When price consolidates, accumulation, and then we break out. I'm not interested in trading the breakout, but I am interested in what? The first pullback. One more step deeper. If you're into Elliott wave theory, right? Running out of real estate here. Elliott wave theory. This would be your middle wave, right? This is your first wave right here. This is your pullback right here. This is your middle wave. Your middle wave is supposed to be the longest wave. These are the moves you want to collect before you get another retracement and you get a shorter wave, and then again, less people become interested in buying because the price is more expensive. So the psychology of this works on so many levels. Now again, you don't have a confirmed trend, but we always spoke about the best moves, not the and best in very loose quotes, are the moves that happen before you get that official trend. Now, to tie it all together, this is where you go back, you say, well, Keel, all this stuff you just talked about. Oh yeah, this is also that 5-0 pattern formation too. So a lot of people out there think patterns are these like, oh, these Fibonacci and these ratio patterns, these harmonic patterns are this voodoo black magic garbage stuff where, I got attacked so much in the beginning of my trading career. I didn't invent this stuff. I just traded it because it made me money. But I got attacked so much at the beginning of my trading career for being pattern trader and voodoo magic. And like I talked about being a wizard earlier, a trading view wizard if you missed it, right? I got to promote that every time now, right? Trading view wizard, inaugural class. Yeah, nice. But I was another type of wizard before. I was this voodoo witch doctor that was burning sage around his desk every morning, trading these mythical, magical patterns and opening the doors of hell, right? Because of all this stuff. And I got yelled at so much. And people, oh, they're stupid. They don't exist. They're made up. And I always tell people this. If you look back in history, right? Harmonic patterns existed even before price charts existed. Now, how can that be true? How can something exist on a chart before charts actually existed? Well, because it's all about buying and selling habits. These moves that we see, the chart does nothing more but give us a visual representation of them. But these moves are buying and selling habits of investors and traders for centuries. If I just told you the story without showing it to you on a chart, if I just showed you the story of, hey, sellers were interested, then buyers were interested, and then not as many buyers were interested, and it went down a little bit, but then buyers were interested again, right? It's the same buying habits. It's the same stuff we do in stores. It's not about magic chart stuff. It is buying and selling habits of the participants in the market. And it's been happening from the beginning of time. Supply and demand has been happening from the beginning of time. Oh, that's cheap. Goodbye. Oh, that's too expensive. I don't want it. That's been happening, right? Bartering from the beginning of time. Hey, I'll trade you 3 cigarettes for that. Nah, 3 cigarettes is a little bit too pricey. All right, 2. Maybe, right? It's been happening from the beginning of time. But the cool thing is, we always talk about confidence in trading psychology, when you can understand why things are happening. And it goes back to what? It's not pattern trading. It goes back to the basic understanding of reading the ebbs and flows of the market. Now your third eye is open, right? And you start to see it a little bit differently. And it's not just a magic pattern. It's the buying and selling habits. You have more confidence in it. And we know that confidence goes a long way as a trader. Cool stuff, right? Probably didn't never looked at it that way. Now I challenge you to do it all the time. I challenge you to think about the next level. Do it. Let me know what you think. Bobby says, I like how we dip down first too, almost like smart money baiting people. Well, yeah, and that's exactly what it is. Again, not to get too deep into it. Where do, I hate to call it this, but like we know that dumb traders are the last ones into the market, right? I apologize if you're one of them. I was a dumb trader, so I feel comfortable saying it. I am allowed to, because I was once them. Dumb traders do stuff while it's too late, right? Dumb traders make moves, right? We go back to like the GameStop stuff, right? As soon as it makes the news, that's when people start mortgaging their houses to get involved. But really understand, by the time it makes the news, it's too late, because it doesn't make the news until it's already a big thing. So they're not hyping up, what is this, Aussie dollar? They're not hyping up buy Aussie dollar until it's here. Smart money, right, needs to get out. Smart money's got a lot of money involved, right? If you are a smart money buyer, you just can't get out the market whenever you want. What do you need? Right? You need to sell. And in order to sell, you need buyers. Well, there's a lot of suckers up here. A lot of suckers who are late to the party. They're going to miss it reading the headlines, and they're late buyers. And those are just what smart money needs to cash out. And then market starts going against them. These new buyers start to panic because they bought up here, and all of a sudden prices going down. So they panic. Eventually it reaches a threshold where they've lost so much that they need to remove themselves from a painful situation. If you were a buyer or in a position and you need to remove yourself from a painful situation, you're looking to get out, right? And then we reverse it. So those buyers that were late now need to sell their position because they need to get out of that painful buying experience that they have. If they're a seller, they need someone to buy. Who's willing to buy at a cheaper price? Yeah, you already know. You already know. Now you have new buyers entering the market. Some are previous, some are brand new. You have previous sellers who are buyers up here flooding out of the market because they're scared. So they're, right, getting out of their position. Boom. Rinse and repeat. Rinse and repeat. Price action psychology. Hope you enjoyed the video. Remember, if you want to join us live for more conversations like this, you can do so. Just hop in the live room. We have a New York and a London session. Both are available with your risk-free trial membership. What is that risk-free trial membership? Well, it's 14 days on our platform. You can join our live sessions. You can take some training courses. You can speak with our community. And really, it gives you a chance to see our teaching and trading style and to make sure it's the right fit for you before making any type of commitment. So there's no auto bill or sneaky sale stuff, anything like that. Just 14 days and your trial membership runs out. So start today, www.tier1trading.com. Once again, www.tier1trading.com. Look forward to working with you.